11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 12th day of February 2014. And this is the daily report for gold and silver. After reaching a new 3-month high, we have gold backing off just a little bit, trading in essence unchanged to down about $1.1290.41. The high is definitely noteworthy, $12.9750, so making that play for 1300, but falling short before backing off of the highs, low 84.40. And as I said, current print is roughly at around $12.90, puts it down 30 cents to unchanged on the day. Silver also in essence change or trading unchanged. It's off about 4 cents, 2017 and change. 2005 is the low, 2051 is the high, and we're still trading really at the top of this range as far as silver is concerned. We have some real serious resistance pegged just at around 2050. You can see these highs. 2051 is the high on the day in silver. Traders, we continue today's show looking at this 60-minute chart. I've compressed it so we can see a couple of things. This is the second of the double bottom. I'm counting both of these as our double bottom, roughly just above that 1181. But what you can really see, hopefully, is the fact that we have had this, besides this one very large spike down, we have had this methodical move up. And it's been really characterized by a series of higher highs and higher lows. Get a higher high, we got this equal low here, higher high, higher low, and so forth. And so for the fact that we just have come close to 1300, as I said, it was trading roughly $3 to $5 higher through most of the evening session as well as in New York this morning. The fact that we see it coming off a little bit and giving us a little bit of profit taking here doesn't really set me off in a way that I'm concerned about it. This is a slow, methodical rise up, and I much rather have that than a parabolic rise up, because simply speaking, a parabolic rise up tends to give us a parabolic fall when the market comes back down. Now, we're looking at our half-a-day chart. Half-a-day chart is in standard candlestick format, and of course here you can really see that slow, methodical rise. We get our first level of support. This is 1245. That's why our initial stops prior to raising them the other day were roughly at around 1245. I told you to put them below, and that was the reason for that. Since then, though, we've had this market really spurt up nicely and really cover this ground to the point where I truly believe that at this point we should see 1280 become support, and our current real resistance in the market is going to be 1300, of course, 1302, and then 1309. And that, my friends, is based on this simple fib retracement. Let's go ahead and compress it so you can see where it comes in from. And what we're looking at with this particular fib retracement is simply the entire move down from 1435. This is that tremendous rally that we experienced, really the only rally of 2013. That was followed by a subsequent fall. When we take a look at this, August, October, November, December, market drops towards the end of the year. And as we said, typically you do get bottoms in the markets in January, February. Historically, we've seen that happen time and time again. Over the last 4 years, I think that we've witnessed it 3 out of the 4 years, and that was one of the reasons we were looking at this particular play that we're currently in. And as I said, the way that I'm pegging it in terms of any kind of real resistance, it's just at around 1300 to 1309. Yet another way to look at it, and I've really blown this up so we don't have any data in here, but it's to give these particular channel support and resistance lines a little bit of weight to them. It's just 23%, and that's where we'll probably find resistance. It's probably going to match up, of course, roughly at that same price point, roughly at about 1300. Traders, looking at a 2-day chart, this is where we have our intermediate as well as our sub count with our Elliott wave. We do have a couple of different support and resistance areas. When we look at this chart, it's quite evident that 1302, that's a 23% retracement of this move down, meaning from 1800 all the way down to 1181. That's one of our retracement points. Our secondary one, I believe, goes from here to here. I'm going to have to look at the lines, but 23% of the shorter of the two, 1302. Market is really up against that. So that's our next level. Above that, though, we're really going to have clear sailing. In other words, should the market have the ability to break through and find support at 1300, the next real level is going to be about 1329. Now, when we look at this 3-day chart, and this 3-day chart has a number of different fib retracements, so we can look at our entire kind of cornucopia, so to speak, of support and resistance levels. And on this particular chart, what I typically look for is harmonics. And harmonics, of course, are points in which we have multiple readings, meaning we have different time cycles giving us the same result. So we've got our harmonics here. We've also got our harmonics here. And so when we look at it, this has got to be our major support. And when we look at this at 1297, or excuse me, 1295, 1292, when we look at that particular price point, we're trading at 1291.25, we can absolutely see that we're butt up against this current resistance. Now, assuming that we break through that resistance, the intermediate to longer term resistance point, meaning above 1329, has got to be this. And these series of tops at 1373 are substantial, and let me explain why. When we look historically at this market, you get these series of tops up here, this triple top, and I remember that as if it was yesterday because we reached the top and it would move back down, and then we came back down to kind of test this area back at about 1300. So, and then you've also got this top right in here. Now you've got a little bit of a lesser top, but you've got a lot of historical data as to why, if in fact the market breaks through this next level, and as I said, I think that this next level right in here should have the ability, or the price of gold should be able to break through there. But this is really where I'm looking for some major resistance should we break through our current level of resistance here. Now, as far as silver goes, we've had this really nice rally in the market, but again, this rally really started at the bottom of this band that we identified, but it's also kind of stalled right here, which is the top of this band, currently trading at 2017. As I said, the high today was 2051. We've identified some really strong resistance right in here. You can see that quite clearly. And then take a look at our 23% retracement level. That's at 2022. So that's this line here. Market's trading just under there. As I said, I would be a buyer of this market if and when it breaks above these pretty critical areas. But until it does, my sense is that there's a decent probability that it will continue to just trade within this range, as we've seen it move back and forth between the range. We've not seen any indication that it's broken above that. And until it does, I am sidelined on silver. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow on Thursday for another daily update and review. Bye-bye.